Hi everyone, today let's talk about Tesla earnings. Then we'll take a look at upcoming earnings for tomorrow. Then we'll go over max pain for Friday. Then we'll go over the charts, and you can see Tesla already breaking that next lower support level, headed towards 167. Then we'll take a look at my results for the day and my thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So I talked about this in the morning video, but I did end up launching a Patreon. I told myself I would do it at my 400th video, which was the morning video today. Obviously, I have no subscribers, so if you do subscribe on Patreon right now, you have my complete and undivided attention. I have no expectations here, so if you want to support me, that's awesome. If you want any of the services that I'm offering here, definitely go check it out. And let me know if there's anything that you would like to see under any of the services on here. Like I said, I just started this, so any feedback is helpful. So Tesla missed on the top and bottom lines, and the stock is dropping. So let's see how they did here. It was down about 1.9% in after-hours trading, after dropping about 2% on the day. Definitely not a great performance. They earned 85 cents per share from $23.7 billion in sales, which is slightly lower from $1.07 on $18.8 billion in sales, which means that their profit margins continue to go lower. We've talked about this before. They continue to cut prices. And they cut prices once again today, and it makes sense that they're not making nearly as much money on higher revenue. The expectation for margins was just north of 20%, and they actually came in at 19% this quarter, which is much lower than expectations. They have the investor call here later today, and you can see really the whole auto market was falling today. GM down 2%, Ford down 4%. And the move is honestly not nearly as bad as expectations. The implied volatility was an 8% move, and we ended up getting about 2 to 3% down after hours. Going through some of the investor letter stuff here, you can see year-over-year revenue growth definitely declining. Operating margins have been fairly strong in comparison to the S&P 500, way better than the auto industry as a whole, and still pretty much on par here with the S&Ps. So Tesla doing fairly well. It's not just them that are declining on margins. The entire S&P is declining, and they're generally keeping up with the S&Ps. You can see that slope is a little bit sharper to the downside than the S&Ps, but like I said, way better than the auto industry, which has been flat since Q2 of 2022. The other piece that I wanted to highlight from their earnings here was energy storage deployments rose 360% year over year in Q1. This is the highest level of deployments that they've achieved, and they're continuing to ramp up the production of these home batteries. Huge growth here. You can see that exponential growth in energy storage deployments. And the question is, how much revenue is this going to generate for Tesla in the future? Right now, their revenue is not beating expectations, but as they raise their earnings guidance based on this energy deployment and the speed at which it's growing, that could potentially present some opportunity here in Tesla stock in the longer term. They also talk solar, which increased 40% year over year, but so far has declined here in Q2. And moving over to the earnings calendar here, you can see miss on the top and bottom line here for Tesla. Not great. Stock's definitely going down. ASML, semiconductor company, beating on the bottom line, missing on the top. L'Oreal, beat on revenue, no earnings guidance. Abbott Labs beat on the top and bottom line. Morgan Stanley also beat on the top and bottom line. You love to see it. And just for fun here, we have the NASDAQ beating on the top and bottom line as well. Moving over to Thursday here, we have Taiwan Semiconductor. Doesn't list if that's in the pre-market or after hours. Definitely interesting. Philip Morris, AT&T, Union Pacific, American Express. Lots of big companies here on Thursday. Volvo, definitely interesting. Further down the list here, we have East West Bank Corp, Webster Financial, a couple of those regional banks that are worth watching. Alaska Air down here as well. First Financial Bank. Kind of have to dig down the list to see some of these, but any of these financials in this lower market cap section is definitely worth watching, just to give us a couple of indicators of that industry, as that is a risk to the economy right now. Moving over to max pain for the SPY for Friday, you can see the put-call ratio is actually going down a little bit, which is interesting. Total options in the market has increased to 4.6 million, so tons and tons of options in the market still. 360 is the highest put strike. It's not even on this chart here, but that's the highest strike. Definitely don't think we're going nearly that low. Probably not going below 385 either. Talked about it last time, but 416 is actually my strike that I think is going to make the most sense here for the end of the week. Makes all of these puts end up worthless, and just a couple of these calls would make a little bit of money. But that's the strike that makes the most sense. 416 to 417, somewhere in that zone. Could absolutely end up somewhere here in the middle between 406 and 414. And going over to the money chart, you can see just how steep this put wall is and how gently sloping the call wall is. So makes sense that we would drift towards those calls and away from all of these puts. Max pain is still 404, which is quite a bit lower than we are right now. So do keep that in mind. Certainly could drift lower into this zone. And I'll be updating on this one. And I'll keep updating this as we go because this is the third expiration for the month. Moving over to the charts here, starting off with the SPY on the 15 and the 1 hour, you can see we gapped down, found a base, and then rallied basically throughout the day up to that resistance point, hit that, and then sold off. A couple of wicks through that level as well. We're now at trend support. See if we hold this level and then rally into this 414 level once again. If we do break down from here, there's some support going back to this low of day on Tuesday. You can see this structure is still intact. This low is slightly higher than the low going back to Monday, but this high from today is lower than the previous high. So we're now getting to a little bit of a wedge, which is interesting. Still holding the uptrend, but it is slowing down for sure. And you can see just how much volume there was on that last candle of the day, which was a bearish candle. So keeping an eye on this. Could go either way, but still in a slight bull trend here on the SPY. Moving over to the NASDAQ on the 15 and the 4 hour, similar thesis, gap down, double bottom, found support, hit resistance, and sold off right at the trend line that we chopped around all day yesterday. See if we bounce from this level and head back up to 319.60. That would be interesting. If we do break down, I'd expect to find support around 316 again. But looking at this 4 hour chart, you can see we are still chopping sideways. We've been holding in this zone for a while, looking for any kind of clear direction, and we're not getting it quite yet. Moving over to the Russell and the Dow, you can see the Russell went lower like everything else and then rallied basically throughout the day, which was the rally that we expect. Definitely made money on that. You can see we're selling off a little bit after hours. I would like to see this come down, retest 177.33, set up a slightly higher low, and then rally through 179.17. That would be interesting. Overall, still bullish here on the Russell. Dow, on the other hand, went straight sideways, multiple dojis in a row. Tons of volume on that, which is interesting. Bearish momentum. Definitely something to watch. If this starts to break down here, it might have a little bit of strength to it. So huge volume, dojis might look to sell off. Moving over to Apple and Tesla. Apple bottomed, rallied, got above resistance here, so that's nice to see. Put a doji on the last candle of the day and selling off a little bit, so maybe we find support about 50 cents lower from here and then look to rally tomorrow. Overall, Apple still looks strong. Tesla, on the other hand, let's go full screen with this here. You can see we're still falling after hours, looking at 167.34 as the next level of support. Gap down below 182. Tested that level and then sold off after hours, breaking the next level, looking at 164.34. Super important level because that is the midpoint of this high, lower high setup. And if this breaks here tomorrow, this is going to have a huge amount of downside. So Tesla could drive this markets all the way down to something like 136.40. You have gaps left around 152. Definitely worth watching here. Tesla starting to look a little bit weaker. And you can see just the massive amounts of volume that have been done in Tesla here from the end of March to today. Not a ton of volume, even on this rally. And then here going back to 31 March until today, just tons and tons of volume were done. And if I was a betting man, I would say that this is probably some shorting volume. We're starting to sell off. And if this continues, it's probably going to have a lot of follow through based on the amount of volume that we've seen in Tesla here. Moving over to Netflix and Microsoft, you can see Netflix continued to sell off after their earnings. Talked about this candle on their earnings, taking out a bunch of stops to the downside. Makes sense. People selling back their positions as we hit those bullish stops. And then here today, we continue to sell off, held support, but we're moving through that here after hours. Next level of support's around 312 for me. That's this major trend line of support. If we get through there, then I'm looking down around 305.17. So bearish on Netflix, and it looks like it's ready to go lower here. Moving over to Microsoft, not a lot to mention. moved down, found support, rallied, still below this trend line here. This is a trend line retest, and we break back down tomorrow. That's going to be pretty bearish. We're in the zone for a couple of days here, and 281.30 might be a pretty strong level. Moving over to staples versus discretionary, we finally hit that $76 level, and then we quickly rejected, hit the 9 EMA on the 4-hour, and then rallied here in staples, so still rising. Momentum basically zero, RSI still slightly bullish. 77.50 is my next level of resistance, so maybe we get a little bit of a drift through this next zone. That would be interesting. Otherwise, moving over to discretionary, similar thesis, gap down, filled the gap through a huge wick, and now we're down quite a bit after hours, retesting the 147 lower level of support. If we break these levels here tomorrow, then we could be moving down to 143 over the next couple days. We were watching this wedge. Looks like we're overthrowing that once again. Now we're coming back down through that level. And if that does happen, like I said, there's quite a bit of downside here on discretionary, and that's going to be pretty weak for markets. Momentum, bearish here on the 4-hour. RSI, this is a clear bearish setup. So we crossed through the SMA, came back, retested that SMA, and now we're down here from that SMA, which I do expect to have follow through below the 50 at least. So like I said, discretionary looks very weak here tomorrow. Moving over to energy and healthcare, you can see both of these are very slowly trending down. We hit support on healthcare once again at 133.59, rallied up a little bit. See if this establishes a lower high and then falls through that level. That would be interesting. Energy, on the other hand, continues to fall, hit that 55 EMA on the 4-hour chart. Really, I'm watching 84.56 as my next level of support. So not much to do here. If it comes into this level, finds support, and then shows a rally, that would be an interesting entry back up to 87.37. But right now, we're kind of in no man's land on energy. Moving over to transports. Tons of movement here on transports. Big push through that triangle that we were watching. Held that level into the close, and this is probably going to go higher, in my opinion. Probably up to around 237, the high from this move here. Before we had the lower move, now we had the triangle and we're breaking out. Probably going to come back into that zone, in my opinion. If we break through that level, then I'm looking up to around 246 for my next level of support, for my next level of resistance. So keep an eye on transports. Interesting to see this going higher with the Dow being flat, but you can't deny it. This is a clear breakout, and it looks like it has some legs going into tomorrow. It is worth noting that you need to be a little bit careful here on transports. Not tons of volume on this ETF. Daily volume is in the 80-ish thousand area, and just a couple of shares can move this quite a bit. Moving over to semiconductors, we've been watching this head and shoulders. Made like a second right shoulder here, which ended up being an island reversal. So we gapped up, fell, gapped down, found resistance. We're waiting to see if this continues to the downside. Definitely interesting here. So head and shoulders, still definitely possible. Still a very bullish trend, so you do have to keep that in mind. But it definitely looks weak. Moving over to the 2 and the 10-year yield, these continue to go higher here. At least the 2-year is going higher. 10-year still basically flat, which makes sense. I think the 10-year is probably going to settle into this 350 area for a while. I think that's probably reasonable. Once we go a little bit higher, and then either the end of this year or next year, we start to see some cuts back into this 350 area. I think this level that we're at right now makes sense. For the 2-year, on the other hand, this could probably go a little bit higher as we get the next hike. We see the next Fed guidance. Then we see if we're going to pause or not at that level. If we do pause there, I think we'll probably drift towards 450 here on the 2-year, which could spell some bearish price action in growth. Moving over to the dollar here, we got a very different setup than we talked about. So we were watching this previous iteration of rally and dump as a possible reoccurrence where we got a rally, and then we were looking for a little bit of a dump, but we actually ended up setting up a higher low, and then we rallied up to resistance here, holding that 21 EMA. We talked about that yesterday being a possibility. If this 21 EMA holds, we're sitting right on top of the 921 and VWAP here on the 4-hour chart. If all of these hold up and we start to break back above 102.20, above this major trend resistance right now, that becomes support and we start to head higher up to 103.64. That's going to be very bearish for equities. So definitely watching the dollar here closely. And like I said, if that follows through, then we're going to see lower prices in equities. Moving over to high yields, you can see here we've been selling off. Kind of a jumble of daily candles here, gaps up and down from Friday of last week to today. Gap down, gap up, gap down. We're now at the 200-day moving average. If we get another gap up, that would be crazy. Quite a bit of gaps in this little area. But overall, this still looks bearish to me, where we have a double top setting up, tons and tons of volume on this candle where we hit that highest resistance and then sold off from there. To me, that spells bearishness, and that it looks like we're going to have more follow through down to around 91.35 to this lower trend support. $91 is also sitting in that zone. And if this continues to trend down and the NASDAQ and the SPY continue to go sideways or slightly higher, that's going to be a pretty good indicator that it's a bit of a fake out and that we do need to be more cautious to the downside. Finishing up with the charts here on the VIX, you can see we gapped up, fell aggressively, set a lower low, rallying a little bit into the close, which is interesting. But it is worth noting that we tested this 55 EMA here on the hourly chart, a level we haven't seen since Thursday of last week. So a little bit of pullback, still got rejection, rallying into the close. We'll see what happens there. Still watching this major trend line here on the weekly chart, sitting at 1564. If we keep carrying on, next week it'll be at 1553. So if this continues to fall, that's where I'm looking for support. You can see last time we got into this zone, we held here for a couple of weeks, and then we threw that big wick to the downside. We hit that level and then rallied super aggressively up to resistance. So certainly a possibility. Go a little bit lower, wick this low, and then we get the bounce up. But I am watching it here in the short term as well. Moving over to my accounts, you can see I did fairly well here once again, 240 on the day. Looking at my IWM positions, both of those 177 puts ended up worthless, which is great. Sold a 177 for 2 days out. That's in a small profit here. I might try to pick up another position in my individual account depending on what we see tomorrow on the IWM. Otherwise, looking at the Qs, I have a 315 and 316 put and a 321 and 322 call here. So perfectly neutral on the NASDAQ going into tomorrow's session. We'll see how that plays out, but right now the NASDAQ has been going sideways for a couple of weeks, and I'm going to continue to play it that way until we see something different. Let me know down in the comments section what you think of Tesla earnings or any of the earnings so far. Seems like markets are holding up fairly well and that this earnings is not going to tank the market quite yet. Also, if you have any thoughts on my Patreon, definitely let me know. Like I said, it's brand new, so I'm definitely open to changing anything. And since I have no Patreon subscribers, any questions that you have will get answered right away. Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.